Hi folks, Scott here, and this is the wrap for Thursday, June 27th. So, real interesting action here. I can't remember seeing in the past 10 years basically 4 consecutive dojis. This was a near doji here. Certainly these three here, just real unusual action. I've seen it more in rising markets that were near highs. Meaning like on this side of a 10-day moving average, not over here. So it's just real unusual. And to top it all off, 3 consecutive unfilled up gaps. I don't even need to test that. Well, I've tested the 3 unfilled up gaps we just did in the trading room. It's happened 5 times in any market condition in the past 11 years. It did happen earlier this year, barely. Only technically, we had 2 gaps that missed by like a tick or 2. These have missed by a mile. Really interesting action. So, unfortunately, I can't show you a whole lot of what this means because it's so rare. It wouldn't give us any real insight into tomorrow. So, just got to stick with my normal approach and identify things that do have decent sample sizes and take cues from them. So, what I want to show you right now is fading gaps after a 2% higher close. We closed up at least 2% above the low from 3 days ago. And we're not at a 20-day high close. So I try to test it, and we're still below the 50 and 20-day moving averages, but the sample size is just too small. So 2% higher close, not at a 20-day high close. And there you go. It's about 50-50 in terms of, correction. This is the not at a 10-day high close. Not a 10-day high close. The 20-day high close is actually similar. I probably should have shown that. In fact, I am going to show it. I'm sorry, folks. I'm a little goofed up right now. Let me just rerun. It'll take just a sec. It gives a bigger sample size. Gives you a little bit more reliability. Because it's happened about twice as frequently as not closing at a 10-day high close. And this will be using end-of-day stop parameters, not something I recommend, but a good place to start your analysis. I'll rerun these exact tests for our members in the morning using our MTG stop parameters, just to confirm how volatile the open may be and whether it's tradable or not. Most of the time it is, but certainly not always. So here you go. 20-day high close after a 2% higher close after not making a 20-day high close. And it's above average win rates on decent sample size, 80+% win rate. The money's been made to the short side using an end-of-the-day stop. Of course, when I apply our intraday stops, these numbers may change. But all in all, pretty good setup, due for consolidation. That's what this appears to me, that we've come very far very quickly. And maybe we'll pause tomorrow, at least in the morning. So we shall see. A couple of things to consider. Tomorrow's the last trading day of the month. Tomorrow's also a Friday. They both have unique dynamics I've discussed previously. And members, if you want to get a head start, you look in our probability video section. I've got over 1,000 videos for the past 5 years that I've conducted posted in there. You can search the video archives by keyword looking for last trading day of month. I think you'll find some interesting information there. Or you can wait till the morning, and I'll share my thoughts then. All right. Sorry for the rough start there. Let's get into what the data showed going into today. We opened, get the skinning down, above, actually quite a bit above yesterday's highs. Mostly UH zone, but regardless, looking at all 8 individual indices gap guides, the average of them was right at my criteria. Just a tad weak. It showed 59% and 1.28 for weighted averages of all 8 individual gap guides. So right at it. And if we opened inside of the highs, it was comparable but a better win rate. So I was actually mildly interested at that point. There are no unique day factors, good or bad, but look at these risk factors. After an unfilled up gap, yuck. After a doji, in fact we've had these for the past couple of days, under similar market conditions, yuck. After an NR7 day, the most narrow range day of the past 7, also yucky. Now I must admit, I was discounting all these numbers in my mind because yesterday we actually put in a 5-day high close. And my just instinct told me, this isn't like a doji that's, after a 10-day low and you're below the 10 and above a 200. This was a doji that was actually a 5-day high close. but still below the 10 and 200. So I thought that would discount the numbers. So that's really where I focused my research this morning. And sure enough, it showed right here with a good sample size that the numbers are actually much better than one may have been led to believe by those unique factors. Up gaps in the UH zone specifically, actually any zone above the highs, it was only almost all of these were UH zones. After a 5-day high close, while below the 50-day moving average, 62% win rate, 1.7 prop factor. For the UH zone, that is very strong. Those are good numbers there. So confirm my suspicion. And let's see, per last night's wrap, fading up gaps after 2 successive unfilled up gaps, also very strong numbers. So these were compelling in my mind. The worksheet was right on the edge of meeting my criteria, but these things were staring me right in the face. So even though I had discounted them, you can get yourself in trouble if you overanalyze, and I'm probably prone to doing that. Factually, take them on face value. These are significant risk factors. So for me, this was an easy one. And one other thing I must say, I'm not going to go into it, but if you look at the individual gap guides, there were only like 2 or 3 of the 8 guides where all the indices updated that met my criteria. So the majority of indices did not meet my criteria. There's a couple of really good ones. So that slanted things more. That made it easier for me to pass on. So I said, this is not clear and compelling enough of an edge for me to trade my core account, which is really all I normally talk about. But I had to acknowledge that I thought these intangibles were pretty darn good. We were stretched to the upside. We were gapping up into those moving averages I just showed you, the 10, 20, and 50-day moving averages, and the payoff was just too big. So I faded the open in a smaller, more aggressive account. My plan was to scale out half at plus, or start off with the original stop, which was I think 8 1/4 today. As soon as we got to +5, if we got there, I would tighten my stop to -5, locking in a break-even trade. I would take off half at +5. And if it sold off, filled the gap, I'd have a nice little win. So that was my plan. I thought it was a pretty solid plan. Obviously, I'm biased. In fact, you can see this is a good view of the action. We've come back and tested the bottom of the window. So who knows, maybe we'll go up and fill that gap tomorrow. Maybe not. But let me show you the 5-minute action. Blue line is the prior day's close. Russell, NASDAQ, S&P, Dow. You can see nothing. Pretty much put in the lows all day at the open today, which is, frankly, I'm surprised by that. My testing shows actually about 75% chance of going down +5. That's one of the reasons that I had that baked into my plan. See, we ran up 7 points. The high was, if I can read it, 16.14 1/4. My stops were at 16.15 1/4 in the aggressive account. So it came close, but then it rolled over, bounced, and finished flat for the day. So certainly could have been sort of ugly, but I wouldn't have had any regrets. My position sizing was appropriate for the account I was in and what I was trying to accomplish. So I did not. I was out most of the morning. My child had her honor roll, year-end honor roll ceremony this morning. So I ran out, set up my gap trades, and ran out. Came back, and I still had a short bias per my pre-market comments, so I wasn't interested in going long into all that resistance. I will admit, though, the range guide showed technically there was some good data favoring the high breakout and low breakout. Though not overly compelling, it was certainly leaned that way. I did not set up the low breakout. Well, let me be clear. I would have set up the low breakout this morning had it triggered. And I've been in the office, just being honest. I was back in the office, saw it trigger here, did not take it. It was lunchtime. All the market internals were just screaming bullish still. Looked like a fake out. I don't know how else to say it. Just internals were all very bullish, and I had my doubts about it. So left that alone, and at just middle of the day in these big gaps, you can get yourself in trouble. Pretty much any day for that matter, and just marking it up with another doji. So a quiet day overall, and we'll see what tomorrow brings us. And that is the wrap for Thursday, June 26th.